Well, good morning, everyone. Happy New Year. It's Shooter. Hey, we're going to go over major markets in primary waves this morning. Of course, at the end of our presentation, please do review our disclosure. Okay, now what we've done is connected a few dots to try and simplify things. So what we're really going to go to is a monthly market format on this. And then we're going to fill in the pieces within chat and special articles that we may need to put out. So let's start off with the general overall risk of the market. Right now, for the next 6 months, I see SPY, Qs, and the Dow bullish. Probably about 6 or 8 weeks out, Russell's might turn bearish, and TLT I see is bullish, and the dollar I see is bearish. So then we highlight the under a year outlook as well, which basically is the same with the exception we're pretty confident it's going to be bearish in the Russell. However, that's unless the Fed resolves it. Now, basically over a year I'm neutral because my work really doesn't go out more than a year where I really focus on that. So looking at the dollar index. I'm going to start off here on the monthly to give you a real visual here. We had this base that came in after the Great Recession, and we had a nice 2-drive, really it's a 3-drive to a bottom, and we really never completed 100% back to the upside. So looking where we are now, we've really had a 2-drive here as well. A higher high in RSI, a higher high in price, at least on this leg, excluding this leg. Then we had another higher high in price, and a slightly lower high in RSI. So that to me looks like it's topped here. So we're heading down to, towards that 82 at some point. However, that could take well into, just looking at our meandering runs, this period took roughly about a month and a half. So, it could take us till the end of the first quarter, even until we reach that 92. Let's take a look at TLT. I want to jump out to the monthly as well here. We've got a nice 2-drive to a bottom here. I still have some reservations on whether that holds, to be candid with you, because anytime you have a second drive, you always need to look out or consider a third drive, for a bottom. So it would be a lower low in price and a higher RSI if that did occur. But I think it would happen pretty quick. I think this 4 would have to come down substantially lower. Let me pull out to the daily on this to give you a visual here. We're going to build out a flat like a shelf here. Then we continue a little bit higher. So that's just the thought right now, and then we should have a launching pad off of that. Now I want to take the longer term look at the SPY, take a look at the monthly, just highlight that. So we've got our 3 that's going to come in, our 4, then we put in our 5. Now out on the longer time frame charts, I'm going to be highlighting, our cycles or the end of our primary wave patterns, and then I'll be stepping down in time just to give you a better visual there. So then we should, after we put in this 4, so we're going to sort of be in this flat here as well, and then we'll put in that 494 and then get a decent back test of maybe $50. This still is about a $25 back test, so it's pretty significant. Now let me just step down, looking how broad this is as far as the weekly look. So we've got intermediate wave 3, intermediate wave 4, intermediate wave 5, which puts in our 3 at that 485. Then we, back test again. There again, building out that flat. It can be very congested there. It can be difficult unless you catch the top or catch the bottom to pull some money out of there. But it's still doable at a $25 range in the S&P. So now I've dropped in a little orange or a little pink box on the S&P daily. So when I'm putting out this daily chart, that's basically I'm looking for the next 7 to 14 days, that time frame. So I think we relatively stay with that box unless we come right out at the open here in New Year's this morning and we break out. We break out. Then I have a different thesis. Then I think this 3 extends, this intermediate wave 3 extends up here, and ultimately we could get in a lower high as our 3 on our cycle wave. So we could get that euphoria, and then we get a slow bleed after. So let's take a look at the NASDAQ. Let's start with the monthly. We're looking for that intermediate wave 3, primary wave 3, primary wave 4. Then we head for our 5, about 476. Then we get a decent back test. So again, are you seeing the theme here? Sort of building out a flat, slow grind more on the Russell, on the NASDAQ though, because we have a much steeper box as far as that looks concerned. Now, as far as the daily look on the NASDAQ, that we got quite a range here, from 409 to roughly 434. So we've got a good solid $25 to the upside here on the NASDAQ if we want to get going. But I would suspect we get a back test here. We've had no real back test of these support levels, and they're important. So we're going to, at some point, back test that. Now, hopefully it back tests it here and not up here, and we get, a leading diagonal there. because then that'd be a little more aggressive than I know people would want to see. Now let's take a look at the Dow. Now, continuation in the Dow is going to occur if our thesis is correct and breadth continues to expand. However, if it doesn't, then I would expect us to stall out in that flat that I expressed both in the NASDAQ and more so in the SPY. But we're going to put in this primary wave 3, then our 4, then our 5, around that 414. Then we get a shallow back test. So it's much more euphoric than the S&P or the NASDAQ to the upside, and ultimately out further in time, which really I can pull this over and drop it in here, is roughly about 485. And I think that'll come in the end of the second quarter or third quarter 2024. All right, let's jump down and look at the daily, just this slow grind. Beautiful look, really, for the Dow. I mean, it's just a beautiful look. Our 3 is going to come in around 390, and our 2 is going to be back in around 357. And then we push around 414. Now, I don't really have a stop here until down about 323, as far as that look. And let me jump back to the NASDAQ. And I didn't highlight the stop, but our stop really is the primary wave setup here as well. And our S&P is really that gap fill. You get below that gap fill, that would be where my stop. Let's take a look at the Russells. Now, very aggressive ABC pattern here. We both have a cycle, super cycle wave, and a cycle ABC pattern. So there are 333s within each other, and very often do they break. They don't just fail and morph to some. So we're gonna get some form of an ABC pattern after this 213. The question is it going to be aggressive as down to 113 or not, or do we come in and do equality? A, B, and C is equal, somewhere around 140. That is really the only difference that I see there. So let's jump down to the daily here. There's still some room to chase this. You got $10 to the upside as we open this morning. I get real interested in the gap. Not necessarily the gap gets filled. We get into the gap because that's going to be a euphoric pop out of that. So that is sort of my thought on the Russells. Now, everybody is waiting to hear about Bitcoin. Now, I like the chart. Actually, I have a more updated chart actually in the swing trade notes, because I ran this earlier than that. We're now up around the 45K range, maybe a little higher than that, because truthfully, I just rolled out of bed and I'm doing the video. I haven't looked at anything yet. So, that's very euphoric. So we could potentially do this. That pushes us up to 50K, which is a big psychological number. We just keep pushing into this, heading into these ETF approvals. We could clearly see my third golden box right at the center where the top of that speed line is. Notice drive 1, drive 2. Drive 3. And what can drive 3 always be? It always can be a break, an overshoot kind of thing. So, but taking a look at the bigger picture, I'm looking for 83K. I don't know that we get it in 2024, but it's likely. I think it really depends on how much of a flat we build out after this grouping of ETF approval. And that sort of a sell the news kind of moment is one thing that I'm concerned with there. And then we just build out a flag maybe is sort of my thought. All right. Now, okay, taking a look at ARKF, the ARK FinTech Innovation Trust. Now, we've got noted, open a starter position at 26 and some change, get to a half a position at 25, and then get to a full position at 23. So I would be looking for the back test. However, jumping out to the weekly, the thesis always is at the breakout to have a full position. So technically, we would have wanted to have a full position on here, down at just below our 23.6 fib. However, since we're looking at this as a little bit of a later entry, and we are still looking for this full breakout up to about 49, our next breakout line would be at this 200. So you definitely want to have a full position on at that point if you did not have the opportunity to scale to the downside. All right, taking a look at ARK Innovation Trust ETF, the ARKK, similar look, but we're looking at opening a starter position at the gap fill at $50 and a half position size, get to a half position size around 47, and a full position size down around 44. Similar concept. At the breakout line, we want to be at a full position, okay? I'm thinking it builds out a little bit of a flat here, and then we go, just because we didn't have a real euphoric push, and we're already testing the base of the breakout as I ran this. So either or, wait for the back test, put a full position on it to break out again, or try and scale. You may only get to a quarter position on this one, but the upside here, 3, 4, 5 is way the heck out there. I've got to go out to the monthly to give you a visual. 5 is up around 264. So, This is looking at being 3 to 4 bags. Now, at this point, either of those ETFs, I do fully expect to hold for a period of time. I think they're, well more than 6 months. I think it's a leading trend to the upside. And be very candid, I think Kathy did a great job at picking those stocks. And I thought it was a very easy way for you folks to get some exposure, and the counts aligned with that thought. So looking at the ARC genomic revolution, and I spoke about this one other time in one of Kirk's interviews, maybe it was week before last, but get a starter position in maybe around 31, a half position around 29, and go to a full position down around 27. Now, notice we sort of have this flat here. So, my thought is it's not that deep. I think this is a trend. I think this is a sector that's going to light up. I think AI is going to have a significant advantage in helping. So either scale, or I'm going to jump out to the weekly and wait for our target 2 on our intermediate wave, which may not manifest. That's my thought. I think this breakout gets us up and out, and I think this whole will count more to the upside, but we are looking for this to be a triple, in the coming year, and giving you the larger picture. My C is way up here at 120 on this, as far as the upside's concerned. But that's what I have for today, folks. Great trading. Until next time. Hopefully this was helpful.